Hello traders, Carolina Lizan here, graduate student of the Grok Trade Mentoring Program. It is Wednesday, June 22nd of 2011, and we are looking at the Q's daily chart as we always do. And check this out. We are making another high on the Q's today, which is at the 55.32 mark, which is a little bit higher than this area of resistance up here, the 55.30 mark, which we've been talking about for quite a while, and we are busting through it a little bit here, but then pulling back down, closing the day lower below it, but we are still making a higher high and a higher low. And check this out, look where we stopped at here. We stopped right at the 200-day moving average, which is here in blue, and we just finished the day right on top of it. So we're still above the 200-day moving average, as well as above the 8 moving average, which is my favorite one here in green. So we're still good. We are still above two major moving averages, the 200-day moving average as well as the 8 moving average, again, which you see here on my chart in green. So what we need to pay really close attention to tomorrow is, again, the high of today, which is at the 55.32 mark, as well as that area of resistance right here, the 55.30. So if we ever go higher, if we ever break through both of them here and close above it, we could head all the way up to that next area of resistance up here at about 55.85, and then once we break through that one, then we can head all the way back up to that next area of resistance right here, the 56.60 mark, and then the next one, a major one, would be right here at this 50-day moving average, which is here in red, and it's right here at the 57.08. So pay close attention to all of them here. But what else can we see happening in here on our chart? We could have a high base formation forming on our chart, trading in a tight trading range right here between the high of yesterday, again, which was at the 55.29 mark, as well as the low of yesterday, which is at the 54.03 mark. So we can have a little bit of a consolidation here at this area of resistance, the 55.30, and then we will need to wait for a break one way or the other. And if we were about to go higher again, we would need to first of all break through the high of 55.32 as well as the 55.30 and then close above it. But if we wanted to go lower, we would need to wait for a breakout through the low of June 16th, which was at the 53.62 mark. So that's a major low, and that's what we need. We'll have to pay close attention to once we get closer and closer to it. So that would be a wonderful confirmation if we could break through the low of June 16th, the 53.62 mark, and then if we could close below it. And from then on, if we ever do that, we could head all the way down to the next area of support down below at the 51.22 mark, which is down below here in pink. So pay close attention to that. But with everything I showed you here, we would also have to pay close attention to the MACD, which is still rising, which is still heading closer and closer to the zero line. But according to the MACD, we're still in the bearish territory. We're still below the zero line, even though we are heading higher, but we are still below the zero line in a bearish territory. So watch that really closely as well. And also pay close attention to the volume to look for another confirmation. Right now, the volume is a little bit lower than yesterday. It's way lower below the average, so it's not really impressive. But look for spikes in volume to confirm any major moves. All right, have a wonderful day, and I'll talk to you again tomorrow.